So, good morning, everybody. I hope you enjoyed the opening ceremony at the main stage with Kopier and Mr. Book talking about not only the future of digital economies, but also about the future of the conference. So welcome to the exploration stage. My name is Sebastian Becker. Today I'm wearing the hat as Managing Director of the German Blockchain Association, Bundesblock. I will say a few words about that later, but now without further ado, let's start the session today with a quite recent study, and I'm happy that Christopher, partner manager here at Frankfurt School Center for Digital Economics, I still have to practice it, and Benjamin Schaub, managing partner of intas.tech, have done together, and it's about the total cost of crypto trading for retail investors, which is of course not only an important topic. As a business association, we can only, support every activity that fosters transparency and understanding of those important issues. So Christopher and Benjamin, over to you.
Yeah, thank you, Sebastian. As you can see, we rebranded as of this morning because we still have the Frankfurt School Blockchain Center logo here. First of all, thanks for being here. I'm happy to see so many faces this early morning in the room. Let's dive right in. So the Frankfurt School, now Center for Digital Economics, together with intas.tech and Statista, conducted the study. We, as the Center for Digital Economics, initiated the whole study. Did the definition of the research questions and the academic contextualization of the results in the end. Statista assisted with the technical support and the visual representation. Benjamin Schaub here next to me, Managing Director of intas.tech, was responsible with the overall support in the design of the study and the definition of the methodological approach. So, we have also quite a past, I want to say that, so in the past years, the former FSBC together with intas.tech worked closely on a lot of joint projects, for example, the DK Digital Asset Monitor, if someone knows that report. For now, I will hand over to Benjamin, who will present you the study framework and design. And Benjamin, the stage is yours.
Thank you, Chris. Is the mic on here? Yeah, I believe so. Okay. Yeah, as Chris said, now it's working. Thank you. So as Chris said, the study aims to analyze the realized trading costs in crypto markets, the dependency of these costs on order size, and especially the retail investor perspective. There were two guiding principles for us in the study, which were comparability and feasibility. The underlying trades that we executed were based on so-called round trips. That is, we would buy a crypto asset and immediately sell the crypto asset. The key metric here is then the remaining euro amount left on our account. An example would be that we buy Bitcoin for 100 euro, we would immediately sell the crypto asset received, then end up with 95 euros, and in this case then the effective costs that we observe would be 5%. Did we consider alternative approaches? Yes, absolutely. There are alternative approaches, for example, using reference rates, mid-market prices from data providers. However, we think that this approach has some structural limitations because market data providers, they heavily rely on data from trading venues and exchanges, and the providers that we have in scope do not necessarily fall into these categories. In fact, if we look at the providers that we have in scope here, then we can observe that their roles under MiCA differ significantly, ranging from operation of trading platform to execution of orders, to reception and transmission of orders, and to exchange against fiat or e-money. So why are the round trips the preferred approach? as I said, comparability. We have the single standardized outcome metric that fully captures spreads, fees, and pricing logic, and therefore enables direct comparison of crypto providers. And also feasibility. What we have done is operationally simple and transparent. It is easy to document. We have screenshots, we have transaction logs. And on a side note, despite total efforts of roughly 600 to 700 hours for the study, we have low complexity. Maybe a few words about the provider selection. Our goal was to analyze the top 10 crypto trading providers in Europe based on usage on download data on AppMagic. We also had as a requirement a MiCA authorization in place. Cut-off date here was July 2025, and we required offering trading pairs in euro as well. We had to make some adjustments. eToro initially in scope had to be excluded because trading here was only possible in USD. A few words regarding the execution setup that you can also see on the slide. We used only mobile applications of the providers. We only used standard accounts, so no pro or paid accounts, and we executed our trades out of Germany. Regarding the crypto asset universe that we covered, I think this is straightforward. Our objective was to cover the asset representing the majority of retail trading flow, especially in Germany. So we focused on highly liquid assets, selected some less liquid but still relevant crypto assets, and we excluded exotic or niche crypto assets. Last but not least, order sizes and observation period. Order sizes, we went for 100 euro and 500 euro trades to analyze the impact of trade size on pricing here. And the observation period was roughly 4 weeks. There we had 4 trading sessions across different times and different weekdays in order to mitigate potential timing effects and market volatility. So that was the more boring part. Now over to Chris for the more interesting part.
Yes, thanks, Benjamin. I will present you now some of our findings of our results. What you can see here in figure 2. Previously it worked, I checked. Yeah, but, yeah, here we go. What we can see in figure 2 is basically the average total costs per round trip, which Benjamin just explained. And I guess the picture speaks for itself, that we see large dispersion here, large differences between the different crypto trading providers. With a range from 0.53% up to roughly 6.5%. Big differences that retail investors incur here. It's also differentiated by the 6 crypto assets which we looked at. You can also definitely say and see here that most of the 6 crypto assets are kind of aligned pricing-wise, except for BTC, which kind of is an outlier here. Coming to figure 3, here you can see the cost difference by order volume. So showing the difference if you increase your order size from 100 euros to 500 euros. That's basically for almost all the crypto trading providers, we can see no real difference here, right? It ranges around the 0% line, only minor differences if you increase the order volume. So it's not really getting cheaper or more expensive, except for one outlier on the right, where if the order volume is increased from 100 to 500 euros, the costs decrease by roughly 3%. Except for 2 trading providers where BTC and ETH are an outlier. It's more or less aligned here. So we couldn't really see a difference here, except for one provider that I mentioned, if you increase the order volume. I guess with that bar chart on the left here, where you can see the average total costs per round trip and byte per rider. Again, I will leave it with that. Findings speak for themselves, and we are happy to take questions the whole day. Both of us will be here. You can approach us, and if you want to download the full report, that is possible via LinkedIn on intas.tech page or the still, as of today, Frankfurt School Blockchain Center page, not a Center for Digital Economics yet, on LinkedIn. And also the whole report, as all the other presentations, will be sent out to all participants of CAC26. Yeah. Thanks for listening. And I don't know if you have any closing remarks. Okay. Good. Yeah. Okay. Yeah. Or
We have time for one or two questions.
exactly. Thanks,
From
Sebastian.
the audience. Let's start over here. I'll come with the mic.
Hey, thanks a lot for the presentation. I have a short question. I mean, you might said it, but are you executing the trades at the exact same time for all exchanges?
We tried actually, but obviously, as you can see, we had this roughly 400 round trips, which equal to 800 trades at the end. So we tried to execute the trades as in the closest time gap as possible. However, for each round trip, it took roughly 2 hours to really execute and document all the trades. This is more the tricky part, because we took screenshots in every step that we took inside the apps. And then therefore we have to archive them and document. Therefore it takes a little longer. Plus we cannot execute at the end. It's about mobile devices and accounts to really trade in parallel. Therefore the limitation is a round trip that was roughly 100 round trips could take roughly 2 hours.
And there's another question. Another 2 questions in the back. Let me jump quickly. That's what they all say, but we are streaming as well. So.
Okay. When you look at the numbers, were you surprised and what does it so what, right? I was actually shocked, if I'm really honest, from a consumer perspective. So did you say we expected that, we didn't expect it? What does it tell you when you looked at this?
I mean, it's one dimension, right? It's pricing, which is quite important, but it's one dimension. It's there are other dimensions of a product, right? Product diversity, security, the regulatory framework maybe behind each of the providers. So obviously, as you can say, the picture speaks for itself. However, we must emphasize it's one category, and we hope that we can conduct such a study in the next years even more often, and then also look at other parts, because this is simply now one option of trading. We're executing market orders here in this case, and I think it would the full picture would be also to include other order types, for example, and so on. But yes, regarding what you can see here, we don't really have explanations for that.
We are a little bit careful of time. There's one last question I will take. Please get the guys afterwards. David,
Sure. I
congrats.
just want to add to that, to your question up there. Yes, exactly. That especially compared to traditional financial markets, right? I'm totally with you. There are a lot of other factors to take into account, but if you just look at that cost factor, especially compared for retail investors to traditional financial assets, it's a big difference in the pricing.
Thank you, Christopher, and congrats, David, for the nice positioning here on the chart. And one last question over here.
Thank you. Thanks for the presentation. One quick question. How did you define the average size of the order, which seems to me fairly low for also classic retail investor? And the second one is this total costs means fee of the broker plus the spread? Thank you.
Everything. So if we speak about total cost, it's everything. It's spread, it's fees, it's pricing logic. It's essentially what we want to derive with the key metric, right? We buy, we sell. The euro amount left is actually what is left. And regarding the order size, Here we spoke to several vendors in the market and asked them for the typical retail investor behavior, and then ended up with exactly the amounts we have in place here. But it's a fair point. I think if we can conduct one more of these studies, we would probably also adjust the trading volumes here.
So thank you a lot, Benjamin. Christopher, you can find the study, of course, online, download it, go through the fine print, and ask the guys later on. Thank you for the presentation.